Welcome to Buy, Hold, Sell, brought to you by Livewire Markets. My name's James Marlay, and today we're going to have a chat about the 5 best performing stocks from FY20. A couple of stats for you on these ones. Average market cap, $9 billion, 125% return in FY20, and a lazy PE of negative 450 to plus 72. So a big range on what we're looking at. Joining me to discuss these 5 top performers, I've got Eleanor Swanson from Firetrail and Junbei Liu from Tribeca. Junbei, your first cab off the rank, the hottest stock on the market at the moment, Afterpay, defying gravity, buy, hold or sell?
It's a hold for me. Look, it was a buy, but it certainly share price has gone through the roof. We think the opportunity set is enormous for this company, and they're only just touching the surface of what they could achieve. 1% penetration in the US and other markets now they're moving into, raise huge amount of money, and they got the war chest to go after those market share. So it is a hold for me.
Okay. Well, big market cap, they've executed flawlessly, huge capital raising, buy, hold or sell?
It's also a hold for me. So Afterpay has absolutely dominated the retail market in Australia, and it looks like they're going to do the same thing in the US. However, we feel that's largely priced into the current share price. To get upside from here, I need to see Afterpay starting to roll out into new markets. So I tend to try and value it market by market, and each new market adds about $6 to the current share price. In addition, we think there's an opportunity for Afterpay to really go after marketing for these retailers and build out a marketing platform. To put that opportunity into context, they generated 10 million leads for US retailers in the month of April alone. So they're not monetizing that at the moment, and we think that's a huge opportunity for the company. It's a comfortable hold.
Okay. Mesoblast generated a lot of interest with some of its opportunities around COVID. Buy, hold or sell? Yeah,
Mesoblast is a buy. So the company is a global leader in developing stem cell therapies. So they've got multiple trials underway at present, including one for chronic heart failure and another one for chronic lower back pain. So over the next 6 months, it's probably going to be some of the most exciting for the company, just given they've got 2 phase 3 trial results coming out. So if either of these prove to be successful, we're expecting a material re-rating in the share price because they are blockbuster drugs. And it'll just clarify the path to commercialisation for the drugs. So just given the upside potential, we think Mesoblast should be in everyone's portfolio, albeit a small position, given that clinical trials are very binary in nature.
Okay. Can you get pumped up about Mesoblast? It should be in everyone's portfolio. Junbei, is it in yours?
Oh, this seems like it's a first for me. Look, no, Mesoblast is a sell for me. When we talked to the re-rate, I felt it's already been re-rated. Share price gone up 70% since they talked to the COVID-related trial that's potentially could generate a lot of interest in earnings. And to me, that it's already been priced in. And secondly, since the announcement, since share price gone up 70%, the standard care for COVID-related patients has already gone up significantly, which means that it will be tougher for them to meet the endpoint, which means the chance of a failure is higher. And secondly, they talk to charging a huge premium should that trial being proven successful, to me that will be quite challenging, just given we've seen some of the early indication of some of the steroids treatment out of the UK and the like are charging very low prices. So there's a lot of unknowns to do with why the share price re-rated 70%, and to me that firmly the risk is on the downside.
Fisher and Paykel Health manufacture a number of different products. One of them is ventilators, which obviously put them in the spotlight. It's had a cracking year. Buy, hold or sell? Can it do it again?
Fisher and Paykel is hold to sell. Look, I think it's an incredible company. It's probably a sell for me at this point. It's an incredible company, done really, really well, and delivered significant amount of earnings growth because of COVID-related, products pull through. And we think structurally will mean, and their high flow product will be, the demand will be significantly higher. However, the current lump earning is pull forward of many years of growth in the future, and with the earnings of trading more than 50 times, it certainly seems a little bit too rich at this point. We prefer the cheaper alternatives such as ResMed at this point.
Too rich for Junbei? You buy, hold or sell on Fisher and Paykel?
Yeah, we agree. Fisher and Paykel is a sell. So as you've alluded to, 2/3 of the business is focused on ventilators, selling them to hospitals, And just given COVID, June Bay has kind of alluded to the pull forward of demand there. We do think some of that is sustainable, so they will retain some of the market share they've gained for this nasal high flow product. However, over 50 times earnings, well and truly priced in. And in addition, a third of the business is focused on sleep apnea, and they're actually losing market share in this segment, so it's a sell for us.
Okay. The complete other end of the spectrum in terms of drivers, but gold has been, a big bright spot on the market. Perseus Mining, mid-tier Australian miner, buy, hold or sell?
Perseus is a hold. So Firetrail is overweight gold. We like gold because it's a hedge against the extraordinary amounts of money being printed by central banks around the world. Perseus Gold currently has 2 operating mines. One is in Ghana and the other is on the Ivory Coast. We think there's better ways to play the gold thematic, just given the higher risk of investing in miners in West Africa. So yeah, we like gold, but it's a hold for us.
Okay, June Bay, have you got a view on Perseus, buy, hold or sell?
I would probably move to more holds. Perseus is a whole lot cheaper than the rest of the gold miners simply because of where their mine is situated. So always need to be very mindful that for a company that mining out of Africa, there's a lot of risk that we can't predict. Many years ago, Perseus has had issues at its mines and share price has lost a significant amount of value. But since then, they've done incredibly well. They delivered to expectations. So they've done a great job, but it's just that risk premium, you need to take that into account. I would much rather play through the likes of Saracen or Northern Star or even Newcrest.
Okay, let's round out our top 5. Megaport, one of the new kids on the block in the Australian technology scene, buy, hold or sell?
It's a buy. I like Megaport because Megaport is probably the only cloud infrastructure company that you can find in this market. Yes, there's NextDC, but NextDC is the future, essentially the future property trust. They build assets for companies to use, and that's more cloud related, and demand for that type of products is going through the roof, and COVID certainly has speed up that kind of adoption. Now, Megaport is the future Telstra, and it has innovated that space, and it's global. It's the largest in its sector because it's the innovator, and it's got enough runway for it to continue to expand global dominance. So for me, it's one of the rare exposure to that space in the Australian market.
Okay. Eleanor, moving to the cloud, it's been one of the major trends and the structural shifts that we've seen accelerate through the past few months. Buy, hold or sell on Megaport?
June Bay, I promise I'm not copying you, but I'm a buy on Megaport as well. So what the company does is they facilitate the transfer of data via virtual cloud connections, and they've got an amazing first mover advantage in building out their network footprint. So the company's currently got 600 data centers, that is double their nearest competitor, and they've also managed to double the number of data centers installed on their network over the last 12 months. We expect the company to continue these phenomenal growth rates. And in addition, they've got a new product pipeline which we expect to support valuation going forward. So it's a buy.
Okay. Well, our 5 stocks had a cracking year in FY20, and our guests see a little bit more momentum left, so don't chuck them out just yet.